And welcome to the Baldwin Company. Our company group is Derek, Ethan, Gordon, Tina, and I am Amy. Some of the strengths of the Baldwin Company: we did have a high number of sales. Our production is very close to capacity. Bead has a 26% of the market share, which is the leading market share in its segment. Most of our lines do have a fairly strong market share. Our HR productivity index is at 112.3%. And actually this round we tried to save some money and spend less in some of the areas of HR, but we do plan to increase that spending again as funds become available. We spent money in some areas of total quality management, and we do plan to spend more of our money in other areas as our finances allow.
Thank you, Amy. Hi, my name is Gordon Pugh. I'm also a member of the Baldwin Company Management Group. I will review current weaknesses identified for our team. It is first important to consider that weaknesses are also opportunities for improvement that we can capitalize on in future rounds. Stock out costs are currently greater than 5%, resulting in lost sales, and it is worth noting. Customer awareness has increased, but has room for further improvement for continued growth, and we should consider increasing our promotion efforts. Next are emergency loans. We need to consider to monitor our expense coverage to assure that we do not need future emergency loans. Operating profit levels are too low, and we need to enhance these levels to assure expenses can be covered. Profits per employee amounts also need to be increased. And last, TQM R&D reduction, admin cost reduction, and demand increase are areas where we need to leverage better investments with our plans for future spending to improve our position.
Thank you, Gordon. Hello, my name is Derek Cotton. I also am a member of the Baldwin management team, and today I'm going to be discussing with you the opportunities that the Baldwin Company saw and addressed in the third and fourth years. In the areas around margins and profitability, specifically return on sales and earnings per share, this was definitely an area of opportunity for the Baldwin Company. We also saw a change in stock price during this time. Profits were negative, and this was most likely a result of insufficient margin caused by a high cost structure or too low a price. What we're going to be looking at in the future years is to raise prices or reduce costs, or potentially do both. We also will be looking at a production schedule and making sure that we have a good sales forecast for each product. We did, however, have a good contribution margin at 37%, which was good to see. Another area was the ability to raise growth capital. Leverage and stock price were areas that we needed to focus on. Stock price actually rose last year by $5.15, which was definitely a positive for shareholders. Forecasting was another area that we saw opportunities in the third and fourth years. Gordon had mentioned previously about stockouts. Our inventory systems is one area that we have too much inventory, so typically it should not exceed 60 days. We had up until 175 days. So practicing just-in-time inventory systems in the upcoming years is going to be something that will be beneficial for the Baldwin Company. Being that we cannot adjust production during the year to meet the demand, what we're going to have to look at is balancing the risk of losing sales to competitors because the stock out against the stock out cost of carrying additional inventory. This is to meet our demand to exceed our expectations. Other areas of opportunity stemmed around automation spread, which was very high compared to our competitors. And we also have the opportunity to continue to add new products and focus around research and development on existing product line and future product line.
Thank you, Derek. I'm Tina DeWitt with the Baldwin Company, and I am going to talk about the threats we are currently experiencing. There are currently 6 competing companies in the sensor industry, and there are 5 different classes of customer needs. Being able to compete in each segment is crucial for our success along with everyone else's. Our falling market price is also a threat to our business. This could have many indicators, including the public's view of us staying in competition. Gaining confidence within the industry is important to build and maintain for us to stay in business. Sales and market share will always be a threat in any industry. Currently, we are holding 21.9% of the total market share, 0.9% up from our prior year. This will be a constant threat for us as others are always seeking to gain market share in the industry. Product variation and the ability to meet customer buying criteria will be a constant battle, especially in determining how and when to spend the money on research and development to stay relevant. Being able to analyze sales, what customers want, and being able to implement research and development to the best ability to meet current needs is vital for our business. Competitive retail pricing is a very real threat to us. Sensor pricing is a sales challenge. Ensuring we are giving our customers the best price while maintaining profits is a challenge, and the competition keeps our challenge relevant every year. So a recap of our SWOT analysis. With our strengths, we have sales of $187 billion. Our production is very close to capacity, which leads us to believe that we will need to be increasing our capacity. Bead, which is our low-end product, is 26% of market share, and overall we are holding 21.9% of the market share in the industry, which is the leading among all the competitors. Our HR productivity index is at 112.3%, and we will increase our TQM spending in the additional years to follow. In our weaknesses are our opportunities. We have stock out costs of over 5%, which we need to work on that. Our customer awareness. Even though we've only taken one emergency loan, we need to ensure that we do not take them in the future because of the interest rates and how it affects our overall performance. Our operating profit levels. We are struggling in this area, but we have also been a slow emerging building our productivity and research and development departments. Our profits per employee can also increase, but upon operating profit levels, those will increase. They are tied together. In the future, we are working on our TQM R&D reduction, admin cost reduction, and demand increase. In our opportunities, we have margin profitability, ability to raise growth capital, our forecasting to better predict what our sales are going to be, our automation spread. We have been working on automation and including and increasing each year, but we need to get better at that. Our research and development is another opportunity to be able to make sure we are within our buying criteria for each of our customer in each of our buying segments. For our threats, we have great competition in the market, which means we need to stay on our toes and constantly doing our research to ensure we are offering the best products at the best price. We have our stock price, and our shareholders is going to start showing concern if we aren't able to increase our stock price. Our market share, which currently we are the leader in the industry, is always threatened by competitors. We have product variation and customer buying criteria, which is also a threat. Even though we hold the number of products that are available to customers, we need to ensure that they're within the proper customer buying criteria available for our current customers. And competitive retail pricing. We need to ensure that our pricing for each of our lines is within the criteria available from each segment.
Thanks to the management team. My name is Ethan Casey. The state of Baldwin Company is good, but as with any startup, there remain challenges ahead. However, the company has all the necessary tools for success. Sales are strong and the company is running close to capacity, but sales are not where we want them to be. This is to be expected in a young and emerging business. Sales forecasting and marketing are key to the company's advancement. Research and development of new product lines will also be vital. Additional changes in the ratio of operating profit versus expenses must be made to avoid urgent need for cash infusion, which may have to take the form of short-term debt, something we have tried to avoid so far. The company can grow by restructuring of the company's long-term debt obligations, or by the generation of capital through additional stock offerings, which would be preferable. Competition will be keen, and maintaining or expanding market share will be a challenge. However, the company's upward trajectory in key areas is promising. The future is bright for Baldwin Company under the current scheme and management team. However, the company must exploit innovation and sales expansion